and welcome. I'm Zunaira Saieed.
And I'm T. Lindsay.
And this is Money Today. Well, today we'll be speaking about the ringgit. Now, the currency is still trading near record lows since the Asian financial crisis in 1998. The Conference Board Chief Economist Bart Van Ark said that the expected rise in the interest rate in the US could put pressure on the ringgit.
He also said that the slower global growth could lead to downward pressure on exports in Malaysia for 2017. Let's take a listen to what he's got to say.
The Conference Board, we are predicting, a growth rate of 2.8% globally. That's quite low. Of course, the Malaysian economy will suffer from that through lower exports, and that's not good for the trade surplus and for the current account surplus. At the same time, we have these uncertainties around monetary policy. So, an increased tightening in the US and rising interest rates in the US will have an impact on strengthening the US dollar, weakening the ringgit, potentially importing more inflation into this country, and therefore have the central bank required to take interest rate measures, and that at the time that you actually need more investment in the economy in order to make this productivity change is a tough one to do. So it's a very fine line to walk for policymakers in Malaysia to balance the challenges of the global economy and the need to continue to invest in growth in the domestic economy.
Certainly a fine line walk for the policymakers. The central bank has definitely intervened and introduced several measures to mitigate the downward pressure on the ringgit. The recent move for the central bank was to compel exporters of converting 75% of their earnings to the ringgit. Now, UOB Kay Research said that this is one of the most prominent measures that could support the ringgit, as it would help build forex reserves for the country.
I think it's a good move. Bank Negara is finally doing something. In a way, it's playing market maker. Why I think it's good is because I think we've got 90 billion worth of proceeds by exporters. But over and above that, it's a multiplier effect, because the normal moms and pops, everybody was afraid. They were converting their ringgit into US dollars even at this level. So I think this is good. This will provide respite to the ringgit, but only on a temporary basis.
Right, and why is it a temporary basis?
Because at the end of the day, for our ringgit to be compelling, to be attractive in comparison to other currencies in the world, we have to be attractive. We have to have high productivity. All this while, for growth, what do? Okay, we invest, we have investments coming in, and we also have labor. But that does not necessarily translate to high productivity.
Right, now coming back to the ringgit, there's still mixed views on the ringgit. Sino RH Capital Managing Director Scott Lim has said that the ringgit could potentially weaken to even 4.8 or even $5 next year. But if the oil prices were to turn around, it can actually appreciate back to 3.8 if the oil prices go up to about $60 a barrel. And while the policy makers take initiative to actually boost the falling ringgit, dealers said that the impact of the ringgit would be only known in the next few weeks. Now moving forward to marketplace, since OPEC's announcement to cut production, oil prices have risen 15%, hovering around $53 to $54 a barrel. Bart Van Ark, he expects it to hover between $45 to $65 a barrel in 2017. Let's take a listen at what he has to say.
OPEC has decided to cut production. That will definitely give a bit of an upside to the oil price. At the same time, we have many other players in the oil market right now, notably frackers in the United States. The oil fracking companies, they are able to very easily fill the gap that OPEC will open up, so that will put a downward pressure on the prices. So I think we'll see pretty much a trading off between the upside effects from OPEC, the downside effects from US oil fracking, and that's why I think the outlook for between $45 and $65 range, depending on some of the dynamics of markets and so on, is a very reasonable prediction for next year.
It is a reasonable prediction, but Lindsay, it is certainly a wide range, $45 to $65 a barrel in 2017.
Yes, okay, I think when OPEC did this, it was a knee-jerk reaction. It was window dressing. But over and above that, it doesn't alter at all the outlook of oil. Oil is still driven by supply and demand. Has that changed? I don't think so. Yes, OPEC controls a third of oil production, so what it says and its actions do matter. But I think at the end of the day, you cannot stop technology, for example, shale production.
Yeah, exactly. And will OPEC actually stick to the production cut? That is another question, because Reuters survey has found that the OPEC's output hit a record high in November of 24 over million barrels per day. If you compare it to October, it was only about 33 million barrels. So which indicates that it is kind of hard to see whether OPEC members will actually stick to this production cut.
That's true. So if you cut production, I think, and oil price goes up, it just means that more players come to the market. So I think for the time being, you will not see oil price go above this existing range.
Right, and analysts are also skeptical on whether non-OPEC members would actually agree to cut production on December 10th of about 600,000 barrels per day. Bart Wenhack says that a big short-term challenge for global economy will come from new policy and political shocks in 2017. Well, that'll be it for today. We'll see you in the next 2 weeks. I'm Zunaira,
And I'm T. Lindsay.
Take care, bye-bye.
Bye.